We're going to talk to Barry Silbert, the CEO of Second Market. He's sitting right here. Barry, you just heard it from Sheila, one of the partners, saying a whole lot of people are going to lose a whole lot of money. It's a dumping ground. Is it?
Well, I think what's interesting is that if there's ever a time for a need for a market like this, it's now. So there's exciting companies that are being listed for sale right now, like a Facebook, like a Tesla. But the reason why is not because they're bad companies or that people, want to sell because the stock price is going down. It's because it's taking longer and longer to go public. It's now 10 years on average between raising money and going public versus 5 years before. So you have this period of time that never really existed before where shareholders needed to get some liquidity.
Okay, there is no question that you make a fair point. People stuck inside these private companies that aren't pursuing the IPO route fast enough do want to monetize the value of their stock. But what's to stop these people from, so to speak, dumping it if they feel that the prospects for their companies are going down?
Well, I think there's a couple things. One is that the way that we've approached the market is partnering with the companies themselves, where the companies get to control who gets to sell, when they get to sell. They decide who the buyers are. They get to decide what information is shared. And Second Market, we are a regulated entity, so we only allow in institutions and sophisticated investors.
Okay, but I can't imagine that the rules governing transactions on Second Market are the same rules governing transactions on the NYSE or the NASDAQ.
Well, actually, a lot of the rules are the same, where the buyers have to be sophisticated and they have to have adequate information to make these decisions. But I think it is a case of buyer beware. But that doesn't mean that these are bad companies. It just means that there's a higher level of standard for buyers who are coming into this type of marketplace.
Nobody's questioning how worthwhile the companies are. What we're talking about is how much of a valuable marketplace you're providing to these insiders. If everything's controlled, how much liquidity can they really get? I mean, your press release that I just read this morning says that you've done $1 billion worth of transactions over the course of 2009, and you have some 4,000 participants. Right. But more than $1 trillion of stock trade every day on the NYSE alone.
Right.
So we're not talking about a lot of liquidity here.
Well, I think if you look at the early days of the NYSE or the NASDAQ, it certainly started very small. The announcement that we're making today is we're acquiring InsideVenture, which was the West Coast version of our Second Market private company marketplace. And as part of that, NEA, which is one of the largest venture funds in the world, and Silicon Valley Bank are becoming shareholders in Second Market, which I think is a big vote of confidence in this concept.
At the same time, though, NEA told us back in the summertime that they were trying to sell the company and couldn't find a buyer. So why was it that you ended up being the only purchaser, and of course, how much did you pay for it?
Well, I think one of the reasons why perhaps they were, looking to sell it to Second Market is because we were so successful in the marketplace, and it is a logical acquisition for us. We have a West Coast presence now. We're now able to expand into primary capital raising for private companies, and it was just logical for all parties involved.
All right, Barry, thank you very much for joining us. That's Barry Silbert, CEO of Second Market, right here in our New York studio.